All right, let's move on and talk about freight costs. Freight costs are important to us because they help us answer a question we talked about last class, and that question was, when do we record sales? Remember, we went through an example and we said, there's all these different possible dates, and I said the general rule is we're going to record sales when legal title to the goods passes from the seller to the buyer. Well, that's determined by the freight terms, or the freight cost. We're going to use something called FOB, which is a very archaic free on board term, but we still use that same phrase. And our sale can be made either FOB destination or FOB shipping point. The terms that we have determine when legal title to the goods passes from the seller to the buyer, who owns the goods while they're in transit, and who's got to pay the freight cost. FOB destination says that legal title to the goods passes when they arrive at their destination. So let's suppose I'm shipping something to a company in England. I take it down to Charleston and I put it on a big boat, and it's going to go in the ocean up there to England. FOB destination says that legal title to the goods passes from me, the seller, to them, the buyer, when they arrive at their destination. So when they get to England, they become the property of the buyer. The whole time they were out there in the ocean, who did they belong to? Me, the seller, or them, the buyer? The seller. So if the seller is responsible for paying the freight cost, they are going to do so with a debit to an account called delivery expense. It's just a plain old everyday expense, a regular expense. Now sometimes it's called transportation out. I prefer to call it delivery expense because that's a lot shorter. So if the terms are FOB destination, legal title to the goods passes when they arrive at the destination. The whole time the goods are in transit, they belong to the seller. You better have some insurance on those goods while they are in transit. The seller pays the freight cost with a debit to delivery expense. Credit cash if we pay it right away. Credit accounts payable if I owe it and I'm going to pay it later on. The alternative to FOB destination is FOB shipping point. FOB shipping point says that legal title to the goods passes at the point of origin. When we put them on the plane, the train, the boat, the spaceship, whatever it is, to send them to the customer. So back to my example of sending something to a customer in England. When I go to Charleston and I put them on the boat, at that moment they become the property of the buyer. So the whole time those goods are out there in the ocean, in the Atlantic Ocean, who do they belong to? Me, the seller, or them, the buyer? Belongs to the buyer. The buyer pays the freight cost, and they do so with a debit to merchandise inventory. You debit merchandise inventory for the freight cost. Well, let's see. Inventory is an asset. Assets go up with a debit. Do I have more inventory? Well, no, not really. But did my inventory cost me more? Well, it did, because I had to pay the cost to have it delivered to me. So by debiting inventory, we make that account go up. We don't physically have more inventory. However, the cost of my inventory has been increased, which is why we debit it. And that's one of those accounts students don't like to debit right there. So you might want to mark it. All right, the next point's a little bit picky. I'm not going to give you this on a test, I'll tell you now, but it shows up in the homework, so I want to mention it to you. What if the seller is required to prepay the freight cost in order to ship the goods? If the terms are FOB shipping point, who is supposed to pay the freight cost, the buyer or the seller? The buyer. Maybe the goods are being shipped FedEx or UPS. Have you ever shipped anything FedEx or UPS? If you do, you go there, and there are exceptions, but as a general rule, you pay them right then and there to take that package and deliver it. So let's suppose we were shipping something FedEx or UPS. It was FOB shipping point. The buyer is supposed to pay the freight cost, but FedEx or UPS won't take it until I pay the freight up front. I'm going to pay the freight up front, and then what do you think I'm going to do? Turn around and bill the customer. Because they were supposed to pay that cost, I just had to pay it on their behalf first. So if I have to pay the freight costs that the buyer was supposed to pay, that is a debit to accounts receivable, because I'm going to turn around and bill my customer for that amount. Kind of a unique situation. It does show up in the homework, though I want to mention it. When Princess Leia sold the lightsaber to Darth Maul, the terms were FOB shipping point, $200 in shipping costs. Well, let's make a journal entry. If it is FOB shipping point, legal title to the goods passes at the point of origin, when we put them on the plane, the train, the boat, the spaceship, whatever, to send them to a customer. At that moment, they become the property of the buyer. So who owns those goods while they're in transit, the buyer or the seller? The buyer. The buyer is going to record the freight cost. They're going to pay it, so we'll credit cash. The debit on the buyer's books to record the freight cost is merchandise inventory. Debiting inventory makes it go up. No, I don't actually have more inventory, but the cost of my inventory went up because I had to pay more to get it delivered to me. So debit merchandise inventory to make the asset go up because I have incurred more costs. This is the buyer, because the buyer pays the freight cost in this case. What would the viewpoint be from the seller? If it is, in our example right here, FOB shipping point, the seller does nothing. Seller does nothing. Only one of the two parties records the freight cost. Only one of the two parties pays the freight. So in this case, the buyer pays the freight, the seller does. In the next example, though, let's assume instead that the terms were FOB destination. Legal title to the goods passes when they arrive at their destination. So the whole time those goods are in transit, who do they belong to, the buyer or the seller? The seller. The seller is going to pay the freight cost. They do so with a debit to what? Delivery expense. Delivery expense. The seller is the one who delivers the goods to the customer. They would have the account delivery expense. Delivery expense is just a normal, old, everyday operating expense on the income statement. So, to recap, if the terms are FOB destination, legal title to the goods passes when they arrive at the destination. The seller owns the goods while they're in transit, so the seller pays the freight cost with a debit to delivery expense. FOB shipping point, legal title to the goods passes at the point of origin when we put them on the plane, the train, the boat, the spaceship, whatever, to send them to the customer. In that case, the buyer owns the merchandise while it's in transit. The buyer pays the freight cost with a debit to merchandise inventory. Either the buyer or the seller record the freight cost, but never both of them.